Hey guys, welcome back. Now, the crypto market took an absolute beating last week as many of us experienced a huge drawdown, especially anyone in altcoins, as many of them got halved. The key line of support for Bitcoin at $30,000 was broken, and the flash crash actually dropped down to the $25,000 mark before recovering back to around 30. So obviously there is a lot of fear, uncertainty, and doubt all around us right now. People are looking at their portfolio values, which are at a fraction of where they was just a couple of weeks ago, and so having a plan of what to do is key. Well, in this video, we'll be finding out and analyzing the latest thoughts of Raoul Pal, including what is going on in crypto and how should we be processing all this information. Then on to the Terra Luna collapse, what exactly happened and where does Luna go from here? And then we'll finish up with what Raoul thinks happens next and why he believes an even bigger crash is still yet to come. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, we are in the midst of a historic time in crypto. So what is going on and how should we be processing this information as investors? Ready? Let's do this.
If you can't deal with a 60% drawdown from peak to trough in your bag, you shouldn't be in the space. We've all made it absolutely clear that this space is all about volatility. And that volatility feels terrible when it's happening, but when you zoom out, the volatility is the thing that gives the upside as well. As I've talked about, this is the fastest growing adoption of any technology in all history. But technological adoption doesn't happen on a day-to-day basis, it happens over time. So you need to zoom out and say, what is happening in the space here? And what's happening in the space is we're seeing a huge amount of activity. There's a huge amount of drama on a daily basis. But over time, we've been in a big, sloppy range. And that big, sloppy range is an up and down 50, 60% range. That's been driven by macro. And I've said this for a long time. Crypto and macro are joined at the hip. Now, people talk about correlations right now. It's just a risk asset. It is right now. Why? Because the actual thing that everybody's picking up is the withdrawal of liquidity by the Federal Reserve. Right. The withdrawal of liquidity is what is moving this. So you take liquidity out, the price of assets goes down. And then you throw in always in a bear market, whether it's equities or whether it's in crypto, you throw in the old terminology that when the tide goes out, you see who's swimming with no shorts on. And that happened to be Luna. Yeah. And we will see the same in the equity market. Somebody's going to go bust. Or the bond market, somebody's going to go bust. That's very typical of the final stages. I also note that on Twitter, it's become monkeys flinging poo at each other, and everybody's losing their minds because everyone's stressed, right? It's a recession, everyone's losing money. That kind of mass anxiety is more of a signal that we're at the end of a move than the beginning of a move.
So the key message being crypto is a volatile asset class, meaning it goes up and down in huge moves. And if you can't handle the 60% moves to the downside, then you probably shouldn't be investing. Now, it's a tough love statement, but it is very true. And for me, I have been in crypto long enough that I've experienced this a couple of times now. And for me, I'm not that bothered as long, and this is the big if, that crypto comes back and then in multiples, because then all of this is just temporary. And remember, it's only a loss if you sell. Right, so let's take the wisdom from the most experienced and wealthy investors in the world. And Ray Dalio is the man that advises central banks when it comes to money. And he said, the problem is every single asset class that you love will have a day where it drops 50 to 70%. And Charlie Munger, in the midst of the 2008 great financial crisis, said, "This is the third time Warren and I have seen Berkshire go down by 50%. I think it's in the nature of the long-term holder and markets. And if you're not willing to act with equanimity, meaning peaceful and calm, to a market price decline of 50%, then you deserve the mediocre result you're going to get. So basically, this is something that every great investor will go through, and likely several times. Okay, next up, one of the largest cryptos by market cap, algorithmic stablecoin Terra and its counterpart Luna did collapse under the recent sell pressure. So what exactly happened?
Right, it's one of the biggest protocols that completely imploded. And there are a lot of reasons why it happened. Some of them are that I think the team did not listen to others who said, you've got a death spiral in this. And they were trying to address it by moving towards having Bitcoin as collateral and creating this new liquidity pool. Somebody only needs to sell 350 million of UST to essentially create a situation where UST, to keep the peg, which is the stablecoin UST, they would create more Luna. And in normal condition, that works fine. But with 350 million, what happened is it breaks the peg because there was not enough liquidity because the pool wasn't set up. So they have to start automatically via the algorithm issuing Luna, but they then needed to deploy their Bitcoin. So they start selling the Bitcoin into a falling market, which starts driving down the price, which starts then moving down the price of Luna, which starts moving the peg, and the whole lot go into an entire death spiral. And it happened at a rate that I think shocked absolutely everybody.
Yeah.
It started over the weekend, and by Tuesday, it had gone to zero, which is probably the fastest wealth destruction in history in the shortest period of time in one specific thing. Obviously, the stock market going down 10% is a much bigger deal, but it was enormous, and a lot of people lost a lot of money.
So very sad for any Luna holders, and I do hope there's some kind of recovery plan so investors can at least get some money back. Now, I personally never invested into Luna, and you'll notice I never actually did a video on it either, because every time I looked into it and did the research, I just didn't fully understand it. Now, interestingly, in the middle of the Terra Luna destruction, the market then began to test the other stablecoins. So let's take a look at how each one weathered. So first up we have Terra USD, and this was the carnage of last week, as it certainly did not keep to its $1 peg and fell down to around the 0.2 mark. So certainly crumbled under the selling pressure. But then investors turned on to USDT, and this is what happened to Tether. Enormous sell pressure, and you can see a huge spike, and it wasn't quite as dramatic, but it did go down to the 0.95 mark. So not as bad, but it certainly did not keep to its peg. And then this happened to the other stable coins as well. This was Binance's BUSD. Now, although there is a huge spike here, you'll notice that it only slipped very slightly from its peg, 1.02, so it actually held up pretty well, and the same was for USDC. Although a dramatic spike, it actually only deviated very, very slightly. So out of these top four, it was BUSD and USDC that held up, but even Tether got shaken up. Okay, next up, Raoul Pal believes this is probably not yet over and an even bigger crash is still to come.
This is Bitcoin since inception on Bloomberg 2010 on a log chart monthly with the 60-month moving average, exponential moving average. And I've said for a long time, exponential moving averages are the best way of looking at exponential logarithmic trends. So there's the trend of Bitcoin, and basically we're getting very close to the 60-month moving average, which is at about 24,000. Do we get to 24,000 or not? I don't know. It doesn't need to get there. But generally in bear markets, we've tended to test it. We didn't test it in 2011, but we tested it in 2014, 15, and 18, 19. So that's the trend of the actual adoption of Bitcoin. So that's what it looks like when you look at it without a log chart. It's like, oh my God, this is the end of the world. And everyone's saying it's a massive head and shoulders top. If you were to draw the head and shoulders top, you measure from the very top to the neckline, it would give you a price target of 0. It doesn't work in these exponential trends. But that's what it looks like. It's oh my God, this could get really ugly. But I actually think the picture is different. I actually think what we're doing is forming another wedge, which is a corrective pattern, and that we hit the bottom of the wedge. And that normally would mean we would rise to the top. I'd like to see generally 3 touches of the wedge. We had 3 on the downside. We would touch it again on the upside, generally pull back into the range, and then we go. That was exactly the kind of pattern that we had in March 2020. We were at the top of the range. We've shot straight back into the middle of the range. That was the buy signal. So it doesn't mean we're going to go up in a straight line from here, but we probably go up significantly, maybe touch the top of that channel. So maybe we get to 35,000, come back down somewhere, whether it comes back to the low or somewhere in the middle, and that will be the final signal. That's what I'm thinking.
Crypto is currently going through a historic time, and there was certainly some blood in the street last week. Raoul Pal and many of the best investors in the world say that these huge drawdowns happen multiple times in an investor's life. And notice none of them said anything about panic selling. We saw the destruction of Terra, and I hope for investors that there is some kind of recovery plan, which we'll find out more about this week. And Raoul believes there is a new wedge pattern forming, which means we would see some kind of relief rally back to around the 34,000 mark before one last big drop to around the $20,000 mark. So a bigger crash may still be to come. So there you are, guys. Hope you enjoyed, and I'll just finish by saying try to stay out of the fear and the FUD. Do not check your portfolio balance, as it really isn't beneficial. And the biggest point is if crypto is over or it's just gonna come back. And that will be the topic of a video coming very soon. So just to say, if you did enjoy anything in the video, then drop a like, always appreciated. If you haven't yet subscribed, click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.